6775.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990. 800-306-1990 or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990. 800-306-1990 or ronsiegelradio.com. Yeah, a lot going on this morning. We're just checking the celebrations. That part is not the excitement of the day. You know, the last few days that we've been broadcasting, I don't know about these celebrations of the day. National Ampersand Day, National Ants on a Log Day, Another Look Unlimited Day. I don't know about any of these things. It's just amazing. Guess we're going to have to go back to Labor Day again. Acorn squash, salami, beer lovers. All of those are from yesterday. So maybe we'll just have to carry over that holiday just a little bit because maybe some people are still on holiday. I'm looking at the Dow Jones Industrial Average down 486 points. Ow! Yeah, that one's not a pleasant sight right now. The S&P 500 down 71 almost. Gold up $1. Oil, oil is down $3.37 per barrel. What is driving oil down that much? That's a good question that we'll have to be looking into. Why do we see the oil numbers falling so much? We never we always want to know what the cause is of some of these issues. Maybe it's because the U.S. is getting back to work again. Do you think that could be the case? We are oil independent or energy independent. And maybe it's because the refineries didn't have to shut down for as long as they were expecting from the storms on the Gulf of Mexico. We'll see. National average of a gallon of gasoline, $2.21.8 here in Calizuela. We are $1 more. $3.24.4 is our average gallon of gasoline in Calizuela. Mississippi, $1.88. So once again, Mississippi under $2, Calizuela over $3. And I think Calizuela may be the only one of the continental United States. That's the only continental United States that is over $3 a gallon. Hawaii is with us over $3, although Hawaii is about 3 cents a gallon on average cheaper than Calizuela. Can you figure that one out? I don't get it, but Calizuela, being the highest price gasoline in the entire country. Can you say taxes, boys and girls? Why are people moving to some other states, boys and girls? Maybe that's the issue. Hey, let's take a look at the 10-year Treasury, down almost 5 basis points. So we've watched that one. It was up quite a bit on Friday. Low volume, didn't really make a whole lot of difference whenever you see a real low volume. And again, the Friday or the day right before a long weekend, especially Labor Day. Labor Day's got a special place in the world just because it's the last, theoretically, it's the last long weekend before some end of summer and supposedly kids going back to school. So theoretically, or historically, we see some low volume on the Friday or the days right leading up to the Labor Day weekend. That's part of the reason right there why we see that happen. So we are watching that. What that means to you as a investor or as a home buyer is the numbers that you see on that date. You want to just, you don't take them with a grain of salt. You need to understand them, but you do recognize the fact that there can be large volatility. When there's low volume, you see higher volatility. And while on some of the purchase transactions for our private clients we locked before the market took a big drop, we are seeing some significant benefit to having made those changes. So I'm just throwing that out there for you to give you a little bit of input as to what's going on, why it is going on, and understanding again, the big issue always becomes the why. Why is it happening? What is happening? Is it significant? And is it something that we need to work toward? Or we need to make a adjust toward? So I throw that out there for you just to give you a little background. I did share this information. Might also be the information that helps you understand markets just a little bit. So the question came up to me, generally what happens if the Dow is down? Does that mean that interest rates are up? If the Dow is up, or if the market as measured by the Dow or S&P 500, if that goes up, what effect does that have on interest rates? Well, here's the norm. And it's not always the case. Nothing is always the case when it comes to the markets. But here's what the norms are, the normal issues. So generally, when the stock market is going up, the bond market goes down, so interest rates go up. Generally, when the stock market goes down, bond rates go up, interest rates go down. Why does that happen? Well, money flows from one investment class or one grouping to the other. Flow from the stock market, which is a little riskier, to the bond market, which is seen to be safer. Now, when it comes to a weekend or a holiday weekend like we saw, sometimes what happens is the money does not flow in the normal method. So the money might not go from the stock market to the bond market. Sometimes the money will go from the stock market to the sidelines. So then we have a divergence from the norms. And that's kind of what we saw on Friday, where money was not necessarily going from the stock market to the bond market. Now, historically, September is not a good month in the stock market. There are a lot of cyclical traders. So you've got the technicians out there. You've got the fundamentalists out there. Now you've got a group of people that are really technicians or cycle traders. And they look at what the cycles are of the markets, and they they invest according to these cycles. Well, the cycles right now are pointing toward a down September. So we're watching that. Now, does that mean that that's going to happen? Absolutely not. There are no absolutes when it comes to the stock market. So I'm not giving you any kind of financial advice. I am not telling you what you should do or should not do. Just having a discussion here so you can take a look at these issues for yourself and see, does what the bald guy have to say, does it make any sense? And you can make those decisions for yourself, see what's happening right there. Now, we did see quite a bit over the last several months that a lot of the market, as measured by the Dow or the NASDAQ or any of the other indices, a lot of what's been going on has been driven only by a handful of stocks. The markets would probably be down. I don't have the exact numbers in front of me right now, but the markets probably would have been down had we taken out Apple, Facebook, Tesla, Amazon, Google, right? But now we're seeing that those stocks are the ones that are going down quite a bit. As I chat with you this morning, Apple's down a little over $4 a share, Microsoft down 8 a share, Facebook down 8 a share, Tesla, Tesla's down 60 a share. That's got a different issue though. So these are some of the stocks of what's going on. Now Tesla is a unique situation. Why is Tesla doing what it's doing? Well, a lot of the market believed that Tesla was going to be added to the S&P 500, and a bit of a shock, and they said no. S&P did not add Tesla. They added 3 new companies to the S&P 500, Catalent, Etsy, and Teradyne. Tesla was thought to be in line for addition after announcing a 4th consecutive quarter of profitability, a requirement of the index, which many observers cited as a reason for the gigantic increase in their stock in recent weeks. The S&P inclusion now likely a done deal. When reached Friday, one of the commentaries, champagne was on ice to get into the S&P 500. It was baked into the shares. Well, when that didn't happen, now Tesla's stock is down. Is there any better or worse based on what we saw? No, it's not. Still the same stock, still the same company. But the bottom line is that Tesla, it's when the markets put something into a stock, when they put some belief or some factor in there, and it doesn't happen, well, whatever was built in, whatever expectations were, well, now it's got to come back out the other way. So that is just the way that one works. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, have you ever seen a housing market like this? How to pay collections. And we've got that featured home brought to you by mysocallender.com, mysocallender.com. Reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams, or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. License by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel Radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special public rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you would do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our good friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star has the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Dow Jones now down 439 points. NASDAQ down 316 points. S&P 500 down 69 points. 10-year Treasury down 5 basis points. That's the yield, or the interest rate is down 5. It was up quite a bit on Friday, so we're not really too concerned about that. It's now at 0.674. And the mortgage-backed securities, they're up 13 basis points, which means interest rates are down slightly. But why is all of that happening? Well, the NFIB, that's the Small Business Optimism Index, rose 1.4 points in August to 100.2. Plans to hire, positions not able to fill, and plans to increase inventory all rose, while capital spending plans were unchanged. Current compensation rose 3 points to a 5-month high, but future compensation plans were unchanged. NFIB's chief economist, Bill Dunkelberg, said, quote, small businesses are working hard to recover from the state shutdowns and effects of COVID. We are seeing areas of improvement in the small business economy as job openings and plans to hire are increasing, but many small businesses are still struggling and are uncertain about what the future will hold. Peter Bookfard, John Malden covered the Fed's favored measure of inflation, PCE, in their recent reports. And we've mentioned before, PCE understates inflation because it has a small weighting on the cost to put a roof over your head and medical expenses. Median rents are up 37% year over year. Now remember, median rents are not average rent. They're not your rent. Could just mean that people are willing to spend more money on rent. So they've got to have half the properties, half the rentals above that, half the rentals below that in whatever the sample was. So renters are spending roughly 37% of their paychecks on rental costs, but PCE only gives it a 21% weighting. In essence, PCE is only capturing 56% of the rental cost felt by the consumer. Have you ever tried paying only 56% of your rent? Not a good idea. PCE also uses healthcare costs imputed by Medicare and Medicaid, which run by the government and kept low, out-of-pocket medical expenses, which consumers really feel are not accounted for. This lets the Fed pretend inflation is low so they can continue to keep rates low and keep the stock market moving higher. This week, we're going to get a gauge on the Consumer Price Index. We'll also be getting a few other important auctions which can impact the market. We'll be watching all of that for you. CoreLogic reported their loan performance insights for the month of June, showing that 7.1% of mortgages were 30 days or more delinquent, down from 7.3% last month. Loans 60 to 90 days past due dropped from 2.8 to 1.8%. Loans that are seriously delinquent or 90 days or more increased from 1.5 to 3.4, 1.5 to 3.4. Ow! Basically, all that's telling us is that the folks that went on the forbearances are moving through the system, right? So they were at 1.5, now they're at 3.4 because they had been in 60, then they went to 90. They were in 30, they went to 60, now they're in the 90 and over. So that's what that information is telling us. Delinquencies may be rising a bit. Home sales going fast. 68% of the 597,000 existing home sales that took place in the U.S. in July were listings that were on the market less than 1 month. That's some fascinating information right there. So properties are selling quickly still. just keep that in mind if you're thinking about buying, selling, refinancing, restructuring any kind of a home loan. We're going to start doing a bit of a segment on the broadcast from time to time, just giving you some plain old education, right? Because a lot of, and that's our mission at Ron Siegel Radio, is just to give you some education on what it means to refinance a house. Right now we're in a what we call a refinance boom. People are looking at their properties, they're wondering, okay, what's going on? What should I be doing with my property right now? How do I benefit the most from my property right now? And where do I get the numbers? So the idea here, it's all about a charting, right? And you have to understand what some of the analysis means, right? I just consulted with some folks on Thursday or Wednesday afternoon, one or the other, and we're basically looking at the fact of what does it mean? What is your blended household interest rate? And how do you figure out a blended household interest rate? So I want to share a little bit of that with you and just get you some of this data so that you can understand that your interest rate on your house is not necessarily the only thing that you need to be concerned with when you're talking about refinancing or restructuring a home loan. What you really want to do is look at what is your blended household interest rate and how do you figure out a blended household interest rate. So the blending comes from the understanding of all of your debts, not just your home. So your home may be at a 4.5 interest rate, a 3.5 interest rate. It may be something of benefit to you. But what I want you to understand here is that when you blend in and you bring in the other items that go into your interest rates, you're going to end up getting a blend. What I mean by a blend is if you've got and I'm trying to bring it up on my screen, for those of you watching us on ronsiegelradio.tv. So what we want to really look at is we need to know what is I'm going to go to a different area here so I can actually get this data because it's giving me a rough time on my computer, which is not fun. So basically when we're looking for a blended interest rate, we're wanting to know what is your home loan, what is the amount, what is the interest rate? What are your other debts? What are those other amounts? What are the interest rates on all of those other items? And until we know all of the items that we're looking at, that we're putting into the equation, we really don't know what your numbers really look like, right? And the reason we don't know that is we're working from ignorance. And that is the key point that I'm trying to get to here in sharing this with you, is you've got to know what the total packages are. So if you've got, and I just found another copy of one of a client sheet right here, one of our private clients, they have a $448,000 loan. Their interest rate is 4.5%. We're looking and saying what makes sense for them. They've got a couple of vehicles that we might want to pay off. They've got some solar they might want to pay off. But when we look at all of the blending of all of their numbers, their blended household interest rate went from 4.5 to 4.9, right? So anything below 4.9 in their situation means that they're benefiting in their numbers. They're benefiting from doing a refinance if we can get below 4.9. So when you see these commercials that are teaser commercials online, and the teaser commercials are telling you that we've got a potential of a 2.5% interest rate. Well, the first thing I want you to do when you see those teaser commercials is when you get to the very end of the commercial, hit the pause button on your television and look at the fine print. The pause button is where you're going to find what that fine print is. That's going to tell you that it's a $500,000 loan, or a $300,000 loan, 50% loan to value, purchasing the property. It's not a refi, it's not a condo, it's not a townhouse, not a manufactured home. I'm going to tell you that you have to have a 740 or 750 FICO score or more for that program. make sure you're looking at all the fine print, because most of us don't live in that world. We live in the world of reality. That's not a world of reality. So we're going to chat more about this concept of what is the blended household interest rate. When we come back, you're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Have you ever seen a housing market like this? How to pay collections, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio. On Twitter @Ron Siegel, and if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit Siegel Lending Team. SIEGEL lendingteam.com. Payment example excludes taxes and insurance. Call us for full details, 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender, licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL lendingteam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL lendingteam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564, SLT Home Digest 79564. Find your dream home before someone else does. Digest is going to tell you exactly what the market believes about your property, what the county recorder knows about your property. And it is a free tool from your friends at Ron Siegel Radio. Have you ever seen a housing market like this? 2020 will certainly be one to remember. with new realities and norms that change the way we live. This year's real estate market is certainly no exception to that shift, with historic highlights continuing to break records and challenge what many thought possible in the housing market. Here's a look at 4 key areas that are fundamentally defining this market this year. Housing market recovery. The economy was intentionally put on pause this spring in response to the COVID-19 health crisis. Many aspects of the common real estate transaction were placed on hold at the same time. Thankfully, technology and innovation helped the industry power forward, and business gradually ramped back up as shelter-in-place orders were lifted. The result? Total transformation of the market from rock-bottom lows to exceptional highs. Today's the housing market recovery is being called truly remarkable by many experts and is far exceeding expectations. From pending home sales to purchase applications, buyers are back in business and homes are selling fast. According to Housing Market Recovery Index by Realtor.com, the market has surpassed pre-pandemic levels and has regained the strength we remember from February of this year. And if you're watching us, RonSiegelRadio.tv or on the KMET AM 1490 ABC News and Talk videos feed, you'll see a chart that we're sharing that shows the housing market's recovery and how it went from a 106.5, and again, these are base numbers, down to 83.1, and right now we're back at 106.2. 4 components go into this: demand, supply, price, and time on the market. Record-breaking mortgage rates. Historically low mortgage rates are another 2020 game changer. Today's low rate is one of the big motivating factors bringing buyers back into the market. The average rate reached an all-time low on multiple occasions this year, and it continues to hover in record low territory. When rates are this low, buyers have a huge opportunity to get more for their money when purchasing a home, and something many are eager to find while continuing to spend more time than expected at home this year and likely beyond. Continued home price appreciation. One of the key drivers of home price appreciation this year is historically low inventory. Inventory was low going into the pandemic and is still sitting well below the level needed for a normal market. Although sellers are slowly making their way back into the game, buyers are scooping up homes faster than they're coming up for sale. This is a classic supply-demand scenario, forcing home prices to rise. Selling something when there is high demand for what is available naturally bumps up the price. If you're ready to sell your house today, this may be the optimal time to make your move, as Bill Banfield, EVP of Capital Markets at Quicken Loans, notes, quote, "The pandemic has not stopped the consistent home price growth we have witnessed in recent years. Increasing affordability, even as home prices continue to rise, affordability is working in favor of today's home buyers. According to many experts, rates this low are offsetting rising home prices, which increase buyer purchasing power. An opportunity not to be missed, especially if your family's needs have changed. If you now need space for a home office, gym, virtual classroom, and more, it may be time to reconsider your current house." According to Mortgage News Daily, again, I quote, "Those shopping for a home can afford 10% more home than they could have 1 year ago while keeping their monthly payment unchanged. This translates into nearly $32,000 more buying power," unquote. Bottom line, with mortgage rates hitting historic lows, home prices appreciating, affordability rising, and the market recovering like no other, 2020 has been quite a year for real estate. Perhaps one would have never seen before and may never see again. Let's chat today if you're ready to take advantage of this year's record-breaking opportunities. That is the Real-Time Real Estate segment, again brought to you by the area-trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. So before the break, I was chatting with you a little bit about the difference between your home interest rate and a blended home loan rate, blended rate. And the blended rate is something that we use. It's a weighted number to see if it makes sense for you to make any modifications to your home structuring. And what I mean by home structuring, you're financing. So during the break, I was able to get the chart up that I really wanted to share with you, because in this scenario, this family has $735,000 property value with a loan balance $448,000 on a 30-year loan, 4.5% interest rate. Looking and saying, okay, does it make sense just to restructure that loan? Or what would happen if we consolidate their other debts? What are the other debts? Well, they have a vehicle loan that's a $550 payment. They had another vehicle loan with a $514 payment. Got a solar loan with a $143 payment. They've got a total of $89,000 in other debts. So what happens when we blend all of these things together and see about where the numbers fall out for them? Can we afford to build everything into a new loan? And do we want to take a 5-year, 4-year, whatever the number is, car loan and build that into a 30-year home loan? Does that make sense? Well, you never know the answer to that question. A lot of people say, well, I don't want to do anything like that, Ron. And I'm saying, are you sure? Well, the answer to the question only comes from analysis. So when we analyzed all of this and we built it into the model, it comes out by consolidating everything. This family can save $884 a month, $884 a month by going into a new home loan at I think the interest rate was actually a little bit higher. The interest rate went to 4.6 instead of 4.5, which is on their current home loan. And they save $884. Why? Because the interest rate on all the other debts was offsetting the rate on the home loan. Now, I go back to the same question, though. Do we really want to build all of that in and have a 30-year loan for what was originally some smaller numbers? Well, here's the answer to that question. What happens if we take that $884 and apply that? Because what's the difference in the $884? We were paying off the cars. We would have done that anyway. We would have paid off the house over a 30-year loan. But what's the difference? The difference is how much the financial institutions are charging for interest. So this family was able to make all those payments, but by doing a restructuring, they're saving $884 a month in interest, because the other numbers are all the same, right? The balance on the car loans, the solar loans, and the house, those balances are the balances. They're just going to be paid off through the amortization table. So the only thing that we're changing is the interest rate to save that $884 a month. Now, if we take that same $884 a month that we're saving and spend that money as a principal reduction every month on the home loan, we're going to cut our term from 30 years to 18 years, 3 months. Now you're saying, okay, Ron, that's still taking our car loans that were 6 years and stretching them out to 18. Yeah, you're right. But that's the small stuff. So we're taking the pennies and increasing that, while we take the big stuff, the $20 bills, and decreasing that significantly. So under this scenario, the family is going to save a lot of time. They're going to be debt free in 18 years, 3 months. And if they were to take any raises they get over that next 18 years, 3 months and apply it to more than an $884 principal payment, they're going to be debt free even sooner. So think about those numbers. Think about that concept, because even though you're increasing the interest rate, they went from 4.5 to 4.6 on their interest rate. Their debt service, the amount of money they have to spend every single month, went down. By applying that now to the principal of the new loan, we're doing better off. So we want to, our whole goal here, our goal is not to just to do a refinance for the sake of refinancing. Our goal whenever we do a refinance is to basically see how we can improve our family situation. And if we can improve our family situation by cutting several years off of the home loan, that's what we want to do. Because that's at the end of the day, this family, and I'm not a big proponent of paying off houses. You know that. This family wants to retire. They want to then get a reverse mortgage, and that way they can pull money out of their house, but they're debt-free. Other than that, they've got the reverse mortgage for the safety of having that benefit or having that money available whenever they want it. Problem is, when you're dealing with home equity, that is not liquid. That's not liquid. That money does not come back to you. If you have an accident, if you lose your job, how do you access the home equity money? Right? The lenders are going to want to say, okay, where do we get the money? How do we do this? So you want to make sure that you're always discussing the long-term picture, the long-term goals and objectives of the consumer. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, how do we pay off collections? And that featured home brought to you by MySoCalLender.com. MySoCalLender.com. You can reach me anytime. Our off-air number is 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
In the middle of our street.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites, Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home is valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? A mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to REAP@RonSiegelRadio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Change and without notice. Licensed by the California DOC and DRE NMLS 217037 and 145502 and Cal DRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. at 800-306-1990, 800-306-1990. The featured home segment is what I was trying to get out. Boy, you could tell it's the first day back after a long weekend. My mind does not seem to be going with the conversation here today, but we'll keep on giving it a shot. We work on that. So the featured home segment, again, brought to you by mysocallender.com, mysocallender.com. Let's see if I can find the report for you as they continue texting me through the middle of the show. I got to love my staff where they probably don't know that we're doing a live radio broadcast today. You would think that they would know that kind of stuff, wouldn't you? Let's see if I can find the report here. 6604. Paseo del Norte, 6604. Paseo del Norte is the property. Let's see. Beautiful mid-century modern in Anaheim Hills, noted by windows and high ceilings at the entry. Upon entering, engineered wood floors flow throughout this single-story home. Down the hall are the 4 bedrooms, full bath with a shower and tub. Largest bedroom has an ensuite with jetted jacuzzi tub, walk-in closet, and built-ins, and a sliding door to the backyard. The opposite end of the house, the family room opens to the kitchen, eating area, French doors, and the family room open to the spacious backyard. With fruit trees for your enjoyment, $828,000. Brought to you by Diane Greenbaum, Freedom First Properties. Purchase price, again, $828,000. 10% down means you've got a payment of $4,576. $828,000, again, is the purchase price. 20% down means your payment is $39.85. And if you want to go with a adjustable rate mortgage, those are available. You're going to be about $4,100. I don't know why you'd want to do that, but it is available. Let's give you the APRs to keep our compliance people happy. 3.339, 3.176, and 3.66 NMLS 217037. That is all the information for you, and get you that some good information right there. That's the featured home segment. Again, brought to you by mysocallender.com, mysocallender.com. I wanted to share this with you. We were talking earlier, I gave you obviously the information about that concept of how are you going to go about being able to, what you want to look at when you're looking at doing a debt consolidation loan. That was our discussion. A lot of times we see that also people have collections that they're dealing with on their credit reports. And whether you're trying to conquer unpaid debt, send a collection, you'll likely face some obstacles. 2 of the most common are coming up with enough money to pay off the debt and negotiating a payment plan or settlement you can afford. Once you've accomplished the task, you may still be wondering how to pay collections to a debt collection agency. You can find out how to pay collections right now. Number 1, you have to verify the debt. Do not make any payments or acknowledge ownership of the debt without first making sure you owe the debt and it's still within the statute of limitations for your state. Check with an attorney, go online, figure out what your statute of limitations are, 4 years maybe. In many states, if you make a payment or acknowledge a debt, the clock on the statute of limitations will restart. So be careful when you do that. Once past the statute of limitations, collectors cannot successfully sue you for the debt, but you do still owe the debt and they still can call to collect it. You have the right to verify the debt to ensure you are not the victim of debt collection scam. In addition to requesting a written validation notice from the collector, verify with your state attorney general's office or the Better Business Bureau that the collection agency is legitimate. If you suspect that you are being contacted by a scammer, you can submit a complaint with the Federal Trade Commission. Number 2, know your rights. The Fair Debt Collection Practices Act provides protection for consumers. Many states also have their own laws in addition to federal protections afforded by the FDCPA, Fair Debt Collection Practices Act. If your debt goes into collection, it's imperative you know your debt collection rights. collectors must provide a written notice explaining the debt, including the amount, the name of the original creditor, and your right to dispute the debt within 5 days of contacting you the first time. Collectors cannot lie to you, harass you, or threaten you. They cannot threaten to take action they cannot legally take or intend to take. Collectors generally are not allowed to discuss your debts with anyone other than a cosigner. A spouse or legal representative would need to be given authorization in many cases to speak to your collector. They may contact friends or family only once, asking for help reaching you. Collectors are limited in when they can call your home or place of work. If you request that they stop contacting you while at work, for example, they must comply. If you request that collectors handle all communication through your attorney, again, they must comply. There's also a statute of limitations for how long collection agencies are able to pursue legal action against you. Be sure you understand the statute of limitations in your state and other protections granted under your state's laws. Number 3, determine what you can afford to pay. Starting a budget can help you understand what you can afford to pay each month. Go over your income and expenses to come up with a realistic amount you can pay. Use that during negotiations with the creditors. Number 4, negotiate a settlement or create a debt payment plan when you can't afford to pay a balance in full. Don't be afraid to negotiate with a debt collector and reduce the amount you must repay. Successful negotiations may include these steps. First, explain your current financial situation without getting too specific. Start negotiations by offering a payment lower than what you're willing to pay. Get a counteroffer from the collector. Go through rounds of offers before reaching an agreement. Obtain all settlement details in writing before submitting any payments. Again, before submitting any payments. Some collectors may refuse to negotiate and will demand you pay the debt in full. Some may tell you that you have to use the payment method they prefer and use high-pressure tactics, such as threatening to mark you down as, quote-unquote, refusing to pay if you won't. It's not illegal to refuse to pay any payment method, so stand firm if you need time to figure out how to pay. Don't let a debt collector bully you into paying an amount you cannot afford or that causes you to let your other financial obligations slide. Creating a debt management plan is the next step. While debt collectors aren't required to accept a payment plan, they can be a great way to get a debt paid off. Keep in mind that making any kind of payment arrangement with a debt collector can restart the statute of limitations on your debt. Based on how much you can afford to pay and other individual needs, you can set up one of the following. A short-term payment plan that lets you pay off the debt in a set number of months. A lump sum payment plan that's scheduled for a specific date. A partnership with a debt management company to arrange one monthly payment to be distributed amongst your creditors. Negotiating medical debt. A note on medical debt. Paying off medical debt is similar to paying off any other type of debt, but there's generally more room to negotiate the terms of repayment and a reduction of your debt. Some medical providers let you pay for financial aid or an in-house payment plan so you can keep the debt from going on into collections and damaging your credit. Other ways to pay off your medical debt include the following. Pursue a payment plan offered by medical providers. Apply for medical credit cards for specific procedures. Hire a medical bill advocate to negotiate on your behalf. Apply for an income-driven hardship plan. Seek nonprofit organizations that help pay off medical debt. If you have a verifiable hardship, such as a disability that prevents you from working, you may also be able to pursue medical debt forgiveness. Your medical provider may need your tax returns and other written documentation that provides you have no means to pay your medical debt. Number 5, make a payment. Once debt collector sends you a written agreement, review it carefully for accuracy. There are many different ways you can pay, which we go into in more details a little bit, but there are a few general recommendations to keep in mind when you make your payment. Avoid giving your bank account or debit card information to the collection agency. Instead, pay with a money order or certified check if possible. You want to watch for fees related to payments as well. There could be a check by phone fee or other fees related to a particular payment method. If there are, ask for them to be waived. Document everything. Document your settlement agreements, payments thoroughly. Debt collectors may change the agreement later or file lawsuits for the remaining amount you owe. Make sure you get a signed agreement. When you pay, send it through certified mail with a signature required on the return receipt. How should you pay for the collection if you're not sure? Bank account draft or ACH, personal check, post-dated check, debit card, credit card, prepaid card, law office check, money transfer, PayPal. So be careful on some of them. We don't have the time to go into all of them with you today, but there are many, many ways, and there are some better than others. Talk to your bank, talk to an attorney, give us a call at 800-306-1990. We'll give you all the information we have to make this as safe as possible for you. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today, and Sean, who's engineering us today. And a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Tides that I tried to swim against, pulled me down.